flat. Well, good time to get some perspective in then. We've got Anand Shah, Chief Investment Officer, PMS and AIF at ICICI Prudential AMC with us. Anand, thanks so much for joining in. So the market seems to be getting into a what now mode or what next mode, right? Because we've had a good pullback throughout all the noise of April, tariffs, etc. Managed to march higher and higher. Mid-caps also pulling back very, very smartly. But now is the what next? So you tell us, what next?
A very good morning. I think bang on. Our thinking is that the market has reached a consolidation phase. And why I'm saying that, because if you go back a little bit into the history, I think 2010 to 2020 was a period when the economy was okay, but the India Inc. didn't do well. And obviously the markets also were struggling with a very narrow rally on a few stocks. Exactly opposite, 2020 to 2024 has been massively good from earnings perspective. So the profitability of India Inc. NSE 500 dropped from 4.7% of GDP in 2010 to almost 2.2% in 2020. It again bounced back to 4.8. So you had a very strong earnings recovery, normalization, and ditto for the markets. We had a very narrow rally. 2010 to 2020, we had a very broad-based, led by mid-caps and small caps, a strong recovery in generally market from 2020 to 2021 to 2024. And now we have reached a stage where markets are not cheap, the earnings have recovered, return on equities have recovered, and to that extent, the market will sort of try and consolidate. And from here on, it would be more bottom-up. It will be more stock picking here rather than the broader market.
Hi, Anand. Good morning. Good to see you, Ben. Anand, what are you making of the flows picture? Surbhi and my other colleagues were dissecting the data. I'm keeping the faith, keeping the flows in. But, the liquidity is something that's been, you throw any kind of bad news to the Indian markets and it's been gobbled up because of the domestic liquidity. How are you reading the flows picture? The good news is the foreign flows are holding up after seeing a lot of selling. But the domestic flows, what do you make of the the data that we got yesterday?
Indeed, that's the new thing from the markets perspective. If you see, the volatility of markets have reduced a lot. If I go back again into the history, we used to have quite frequent 20% corrections in the market. And if you see now, since 2020, we haven't seen a 20% correction in the market. The most we have seen is 18% more recently, and generally 10% corrections, which are also very, very regular, have reduced in terms of number of such corrections. So I think one outcome of this strong domestic liquidity is that the impact of global volatility and whatever happens in the rest of the world, while it will always have an impact on the equity markets, we still have FIIs being a large participant, but the quantum of impact it makes on the markets has reduced. So overall, the volatility of the markets have significantly reduced as we have a strong domestic flows to counter any global volatility leading to FII selling off.
All right, we take that point. Just before we come to you once again, Anand, the quick check and on all the Alcobev stocks. United Breweries now down, United Spirits now down about 6%. We have Allied Blenders, which are down about 5% as well. But amidst all of this, two stocks which are doing a lot better. We have GM Breweries. The street believes that the introduction of the Maharashtra-made liquor policy could be favorable for them because if it is imported and then made in Maharashtra, the duty structure is slightly favorable as against being imported and produced in other states and then brought back to Maharashtra. The one thing that we need to know, however, is that all the brand licenses, etc., will have to be re-registered with the department. So does GM Brewery stand to benefit in light of that for at least the very near term until all the other brands come by and find their alternate sources of production in Maharashtra or not? Is something that the street is taking note of. And the other one is Sula, because on the one hand, you have, an increase coming by on spirits, nothing on beer yet, but nothing on wine at all. And Maharashtra, the wine production is the highest in Maharashtra. It's also the biggest market for wine in the country. At the same time, Sula as a stock has been a rank underperformer, has halved from the 52-week high. And over the last 4 quarters, we didn't see sales improvement out there. So can this policy shift turn the things around for Sula or not is something that the street is betting on, which explains why the stock is up around 7%. So we're seeing a big move on Sula as well as GM Breweries on the back of the policy that came by. But let's bring this question back to Anand. Anand, you said stock-specific is the way you would go for the markets. Consumption has been on the back foot over the last few quarters. Do you think consumption revives post the announcement of the budget? Monsoons have been normal. How would you play this? Would you play it via discretionary, specific themes, anything that you like here?
I think we've been observing the consumption very closely. And if you see, especially in the higher per capita income families and the urban India, there is a significant shift in terms of consumption. I think for last 2 decades, we have been focusing on consuming goods. I think we started with FMCG, soap, shampoos, and the Maggies, and two-wheelers and four-wheelers, pharmaceuticals being one of them. I think as the per capita income rises, there will be structural shift from products to services. I think the underlying growth, which is already happening, and we are not counting it as a consumption, is the consumption of financial services. You can see that in asset management, life insurance, consumption of telecom services. I think we have been consuming 20 times more data than what we used to consume. While we are not paying for it, but obviously we are consuming 20 GB of data, spending a couple of hours a day on our mobile phone. We are consuming travel services. Diagnostics is something which is picked up as a percentage of consumption of a family income. Education has always been there, and people are spending more on education. So I think consumption is growing, especially in the higher income people, but it's shifting from products, from paints to travel. I think that's the shift. Even within the product consumption, if you see the way we consuming products is shifting, right? The modern retail, quick commerce, these are the areas where we are finding growth. We are not consuming more of the same stuff, but the way we are consuming is shifting. And that's why the growth pockets have moved from products to services.
Okay. So that's on consumers. Just to round this up, would you expect, I'm not talking about things like jewelry or real estate as a play of high-end consumption. That story has been ongoing for a while. But would you expect some interest to come back to staples? Could they be, if not leaders of the next move, I mean, at least participants in the next move? Anand, just to complete that point.
Sorry, I lost the audio. I didn't get your question.
No, so I was just asking you to round up your take on consumer stocks. What part of consumption would you play in this leg of the market?
Yeah, so I think we continue to like within the consumption space, we are focused on services. We still have exposure to telecom, travel, diagnostics, and all the services within the consumption space, which is organized retail, quick commerce. These are the areas where we have been more overweight than the products. We have been underweight FMCG, we have been underweight consumer durables, underweight auto also to some extent.
Got it. Okay, so I mean, still going with that stance of negative on FMCG, you're looking to play it more via services. Speaking of services, I was looking at the latest fact sheet in, this is your contra strategy on the PMS side, Anand. And obviously financials get top billing over here. I think ICICI Bank, HDFC Bank, these are some of your top holdings. RBI has obliged a lot more than the market would have hoped for. So within financials, is it time to load up on other stocks beyond the bluest of the blue chips? How are you looking at the financials landscape?
I think it's very positive. In a way, it's basically a fairly strong stimulus. We all know there has been a lot of uncertainty around, particularly international markets, around the tariffs, and obviously that would have pulled some of the consumption back, some of the capex, private sector capex back, and I think this is a strong signal that RBI is giving that the attitude is towards more growth, more spending, more capex. In terms of the banks, I think we continue to like the large names for the two reasons. One, they have a very, very strong liability franchise. I think for us, the first step to winning in the banking space is your raw material cost, the cost of funds, and we continuously remain focused On the banks where you have a right to win, you have a cost of funds advantage over other banks. And that's been the key for us. So we still continue to focus more on modes, more on the cost of funds. And that's how we've been going after the banks that we like.
Okay. Finally, since we're talking financials, I have to talk about your own business, as in the asset management business, because so much excitement, right? And the IPO, I guess June. I think June is filing happens, and maybe listing couple of weeks later. But Anand, you tell us. I mean, till now, when one talks about the wealth play in India, it's been wealth management, entities like Angel or 360 ONE. It's been market infrastructure names like a BSE or an MCX. But the mutual funds, listed mutual funds, they haven't, gone right up there in terms of the investor psyche. What's your sense?
No, I think, again, as I said before, as the surplus grows, India has been moving from single income to double income, and from as a P&L, the households used to be deficit a couple of decades back. Today, you have surplus to invest. And I think SIP has been a very, very strong feature of this market. Even when we are talking of flows into the domestic markets, the one thing which has stood the test, this volatility, has been SIP. So I think it's a convincing move of the Indian household towards equity. So I've been in this market for 25 years, and I've seen when equity was not looked upon as an asset class also. From there, we have moved miles where SIP has been a big significant, product which has got a good acceptance from the households. And I think insurance, asset management, and on top of it, the wealth advisory and the wealth management. I think all the three would be required as the per capita income grows and as the savings of the household grows. So I think all the three areas should get growth in times to come.
Okay, all right. Well, Anand, thanks a lot for joining in and filling us in with your take on the markets as well as on individual stocks as well as sectors.